Greetings, members, one and all of the Salivation Nation. Why is gold stuck? Let's explore. Gold prices have been kind of lackluster as of late. We are seeing the prices rise a bit as of the recording of this video, at least from yesterday and a few days drop. But it's really kind of negligible. It can't seem to quite break through the $1,800 level, especially when we saw that gold was trading not that long ago above $1,900 an ounce. But you have to keep in mind that really gold is not that far off from its all-time high of about $2,070, I believe, was the apex of gold's price around August of 2020. And we did see silver rise as well, too. And we've talked about silver and why its price is lackluster, but we really haven't said much about gold. There's an interview that I haven't watched the whole thing over on Kitco, where it's been talking about why gold is kind of just hanging out at this price level. And a lot of it could be technical, but I think a lot of it as well could be because there's other areas that investors are trying to figure out where to put their money in to combat and make sense of inflation. And this interview was with a Agnico Eagle CEO, Sean Boyd, saying that it's stuck because investors are still trying to determine what inflation is going to look like. And we know that it's not transitory. We've all but gotten the Federal Reserve to admit that it's not transitory, even though they still like to use that word. And we can see prices going up. We see more permanent inflation down the road, which is a recipe for higher gold prices down that road. How far down that road will it be? I don't know, because apparently investors are still trying to determine what it's going to look like. Well, inflation, we know what it looks like. It's higher prices for goods and services, higher than normal. And keep in mind that there is always some level of inflation. The Federal Reserve has a target of about 2% per year. But we know it's going higher than that. It's going to stay there. In fact, the Federal Reserve just admitted that we're going to see inflation at least through probably half the year next year, if not 3/4 of the year next year. So we have a pretty good idea. So it makes sense that gold would rise. And it is reacting a little bit today to the markets, but it's still below that resistance level of $1,800 an ounce. But again, with the understanding that it may not get up as high as it got last year before the end of the year, which, by the way, I made a prediction that we could see $2,000 gold before the end of the year. I am actually now distancing myself from that prediction, whereas I'm sticking to my silver prediction. And largely because of not only this reason that was articulated by Sean Boyd, but also the nature that, hey, as we head into 2022, there's still a lot of ways people can protect themselves with their money. And a lot of those are with riskier investments, such as cryptocurrencies. And we've already seen Bitcoin get into record territory this year in 2021. And so we will continue to see things play out as other altcoins start to make their way. In fact, we've heard of a couple of already this year. I can't even keep track of them all because I don't really dabble in that space. It's risky. And I'm pretty risk averse, which is why I like to get the physical gold. But obviously there's other ways to invest in gold as well as hedge with gold in the electronic space as well. But I believe that sometimes you pay that premium in order for protection, and that is what physical does. But nonetheless, this is where we are at, and I think that because of the investment space and even the hedge space has kind of increased a bit, it leaves us to wonder how long it's going to take before people run to the safety of gold, especially when there's other classes out there. Now, one thing that has always been the case, and that is that land, other assets where people are putting their money to protect themselves are there as well, and they're much more accessible online. And so that is something to consider. Real estate is a way that you can invest even online. And obviously we have mining stocks and the like too, although some of those are riskier depending on which ones you put your money in. And we've talked about that. I've featured and profiled some of those companies, but there's also the big guns, the big miners as well too, which are seemingly safer bets, but even they provide some level of risk. And but that's just it. I think we are in a market right now where we're at a transitionary period, especially with real estate. Housing is starting to kind of move in a different direction now. We're starting to see some slowdowns, and those slowdowns could come back, and that's why there's going to be people probably taking money maybe out of real estate and put into other investment classes or hedges. Gold, being the ultimate safe haven, is the ultimate hedge, is really not that far from its highs. And so people have to be a bit more patient with gold, especially if they perceive that the price is going to go much higher. It may not go as high as, like, say, something like silver would. Silver is a metal that is undervalued, considerably undervalued, especially when you consider the what's going on with the supply chains and where we think that it could go. And so this is a metal. Silver is a metal that perhaps even some gold investors may want to watch out for and diversify within the metals to see what kind of increases you may see with gold to get to a more normalized gold to silver ratio, which we've not seen in quite some time. But it wasn't that long ago where we did see it narrow down into the 60s, but it's in the 70s now. So there's several reasons. I think a lot of it is people in the stock market are trying to figure out what inflation looks like, and maybe that's just it. Maybe it's not really hitting them yet. That it's nothing. That it is not transitory. It's going to be here for quite a while. It is permanent, or it's not. At least it's long lasting. Now when I did kind of shy away from the word permanent just a second ago, but in reality, since the Federal Reserve was created, and ever since they have managed to the economy, inflation has been permanent to some level. You look at any given year, there is a devaluing. There is a notable devaluing of a target of 2% per year for these notes, for this Federal Reserve note here. It is by design going to go down in value each year. And so that's why we look to gold to protect ourselves, because over the long course of time, this will certainly perform much better as a wealth preservation tool than holding these. And I'm not against holding these Federal Reserve notes, by the way, as well, in an emergency, just in case, so that you don't have to spend these. This, in a sense, provides protection of your ultimate insurance policy, which is gold. And I believe that to my core. Gold is the ultimate hedge, the ultimate protection, the ultimate insurance policy. And that's how it should be viewed. And, insurance policies have premiums tied to them. If you want physical, well, you're going to have to deal with premiums to hold it. But that's part of what it's about. And I think it's a great thing that we can have the ability to protect ourselves in this avenue, and understanding that the prices move up and down in any given week, month, and year. And sometimes that can work against us, and sometimes that can work for us. But in the end, it's a long-term proposition, gold is. And so that's why we hold it. That's why we have it to protect ourselves over that course of time. And that's the beauty of gold. Gold is a metal that has stood the test of time and will continue to do that. And when we see it stuck like this, this just means that it's in a holding pattern, awaiting what the markets are going to do. And we've been here, we've seen this before. This is nothing new. It requires patience in the markets. We've gotten so used to these high prices now that it wasn't that really, when you think about it, just 2 years ago, it was unfathomable to think about $2,000 gold. We got there. We're pulling back a little bit, but really it's not that much. Gold is really doing what it's done all along. It is being a wealth preservation device. And as I've said many times, you can pick any two dates from any chart, from any asset class, from any investment, and it could be, you can make them look really good or make them look really bad, depending on those 2 dates you choose. That's why you have to average in all across the board in order to see the true value of a given asset class or investment, or in this case, a hedge. And that's what gold does. Gold will never go to zero. It will always be something of value and worth, because it always has been. And that is that historic value is partly what defines its intrinsic value. And so there you have it. Let me know what your thoughts are in the comment section below. Gold is stuck, but you know what? It's stuck, but it's not in the mire. It's doing what it does, and it will definitely perform to preserve your wealth over the long course of time. So I hope you found this encouraging. Let me know. I'd like to extend a multitude of gratitude to you all for taking the time to watch, and to encourage you to please rate, share, comment, and subscribe.